If you follow traditional financial news, you've heard the same refrain repeated for over a decade. Bitcoin is a bubble, it has zero intrinsic value, and it is officially dead. But what would happen to your portfolio if you ignored the panic and simply bought Bitcoin every single time the media claimed it was over? To answer that exact question, we're going to look at the Bitcoin Obituaries Tracker. By analyzing historical moments of extreme market fear, we can stop reacting to the daily news cycle and start using hard data to calculate the actual return on investment of buying the panic. You can access the tool by going to BitcoinCalculator.Tools and selecting the Obituaries Tracker. You don't need to create an account or sign up to use any of the features. Right at the top of the dashboard, you'll see the total death count. This tracks hundreds of times prominent figures have declared the end of the asset since 2010. Next to that is the live Bitcoin price ticker, which pulls in real-time market data updated every 60 seconds. This diagram illustrates the ROI if you bought summary box, which is the most important section on the dashboard. For beginners, ROI stands for return on investment. It simply measures the percentage of profit your money would have generated. If an investor purchased Bitcoin on the exact days these obituaries were published, their average historical return sits at a positive 230%. In this context, an obituary doesn't mean a literal death. It refers to a notable public declaration by a prominent figure that Bitcoin has failed or will inevitably go to zero. These declarations often come from heavyweights in traditional finance, like billionaire investor Warren Buffett, or JP Morgan CEO Jamie Dimon, who has repeatedly criticized the network over the years. Seeing these high-profile dismissals mapped out against the asset's price history shows that heavy criticism is a recurring, predictable feature of the market. To narrow down this massive list of data points into targeted research, we use the filtering panel. This interface shows the date range inputs, which allow you to isolate specific market cycles or focus entirely on the aftermath of major crash events. Using the source type dropdown, you can separate general media panic from statements made directly by government officials or institutional investors. The price range slider lets you find obituaries published when the asset was trading at specific price floors. As you adjust any of these parameters, the top-level return metrics instantly recalculate to reflect only the specific events you've selected. This filtering capability allows you to test exact historical scenarios with real data, rather than relying on broad market assumptions.
Now, let's scroll down the page to the obituary timeline section. Here, you'll find a chronological list of every specific failure declaration, including the exact context and quote for each event. Let's look at a recent, highly publicized example from November 2023. The CEO of Binance, the world's largest crypto exchange, had just agreed to plead guilty to federal charges. The immediate media reaction was swift. Bloomberg published articles declaring that the industry's leaders were criminals and the space was doomed. On the day that narrative peaked, Bitcoin was trading at exactly $37,000. If an investor did the exact opposite of the media consensus and bought the asset that day, their return on investment is now a positive 119%. Isolating these moments of peak fear proves mathematically that mainstream consensus is highly correlated with profitable contrarian buying opportunities.
You now know how to navigate the obituary timeline, filter historical data ranges, and calculate custom returns based on past market panic. Using this tool helps put intense market volatility into a calm historical perspective. Go to BitcoinCalculator.Tools to test the tracker and run your own historical scenarios. While you're there, you can explore over 45 other free, professional-grade tools on the homepage, including DCA and retirement planners. Mastering these analytical tools allows you to tune out the noise and make calculated, data-driven financial decisions.